Lecture 10, Forensic Accounting Research. In this lecture, we introduce the field of forensic accounting. We're going to talk about fraud, the types of fraud, and and how we conduct, forensic accounting or fraud detection. So, what is forensic accounting? Basically, it's an application of accounting principles, theories, and procedures to various facts or hypotheses at issue in some type of legal dispute. So there are some important elements for forensic accountings. It is applicable to the courts of law. You should have a special knowledge. Not only you're good in accounting, but also you're a good detective. So it's an application of your knowledge to a legal dispute. And you're going to issue your expert opinions. Well, of course, you understand all the federal rules of evidence. So fraud investigation is just one aspect of forensic accounting. And forensic accounting can do many other things, including providing services to assess economic damage, or you can do valuation services, or can provide pre-trial support, or can serve as an expert witness, etc. So what can you do as a fraud auditor or fraud examiners? You can assess risk of fraud and illegal acts. You can investigate embezzlement. You can investigate vendor kickback. You can investigate bribery, wire fraud, or security fraud, and many other things. Standards for ACCT members performing forensic services. So these standards are issued by the Forensic and Evaluation Service (FES) Executive Committee of the ACCT. So what is a fraud? In simple words, fraud is intentional deceptions, simply lying, cheating, or stealing. Of course, we have a formal definition, a generic term of fraud. You can read it. That's quite a long paragraph for a definition of fraud. A fraud includes the following elements. It's a misrepresentation of material fact, and known to be false, justly relied upon, and which resulting a loss. So these are the four elements of fraud. There are two basic categories of fraud, or financial statement fraud. We have the fraudulent financial reporting, also known as the management fraud. And we also have the misappropriation of asset, which is employee fraud. We see first the fraudulent financial reporting fraud. Managers, they attempt to inflate, for example, reported earnings or other assets in order to deceive outsiders, deceive investors. They overstate assets, overstate revenues. It could be a contract bidding fraud, or it could understate expenses or liabilities, and many other things. So these are typically committed by managers in financial reporting. And with the second type of fraud, misappropriation of assets, it's typically employees may steal money right, or other properties from their employers. It could be embezzlement, right, kickbacks, many other things. These are typical employee-related fraud. Right. Alternatively, we have another way to categorize fraud. Now we have six categories of fraud. We have the employee embezzlement, right? The management fraud. You have the investment scams, vendor fraud, and customer fraud, and miscellaneous fraud. So this is another way to classify fraud. And here we list examples of fraud activities, and many of these things we know already, right? For example, skimming. Typically, that's for cash account skimming. So the cash will be taken before they are recorded. So you're stealing money from the company, right? The kiting, we use a time lapse between we deposit check, right, and we use the money from that account. That's kiting, right? Deposit forgery checks, or it could be a real check from another bank account which you don't have any money in. So deposit checks to another banks. You create some fund in a second bank. Okay, you use that money. Okay, then you're gonna create another check to try to deposit in the first bank. We call this kiting. But eventually something will happen, and you have to stop, right? You have to stop. But you may use the money from kiting, that's larceny. Okay, that's you're stealing money from the banks. Basically, you don't have anything there. Right, if you're talking about account payables, we have many, misappropriations. Like account payables can make duplicate payments, okay, to a person right? You can have pay to non-existent vendors, which might be you. You can have kickbacks, right, from those are vendors, right? So and many other things. For example, the misdirected shipment, right? All these are related to account payable misappropriation. Right, to better understand fraud, we need to take a look at this fraud triangle, which means there are three factors that's going to determine the fraud. They are motivations, right? So you should have an incentive to commit fraud. Right, for example, for managers, it could be he or she tried to get a bonus, right, or try to exercise a stock option. So these could be a good motivation. The second factor is perceived opportunity. All employees have opportunities to commit a fraud. Right? However, if you have access to important assets, right? For example, cash, or if you have access to financial statement, okay? Or if you have special skills that provide you with opportunities to commit fraud. Right? This is especially true when the internal controls are not effective. Right? For example, negligence of the top management in enforcing ethical standards in all aspects of the company, right? Or there's a lack of supporting document for transactions, or lack of physical safeguard over assets. When the internal controls are not effective, then right, and the perceived opportunities will be greater to commit fraud. And third factor is the rationalization. Okay, typically people will justify their wrong behavior in their mind. For example, right, the company didn't treat you well, and this is what you deserve to have, so you commit fraud. So we analyze the fraud triangles. If an organization can contain any one of the three elements, fraud will most likely not occur. Right? It's not easy to kill people's motivations or to redirect their rationalization. Very difficult. It's in their minds, but a company can always try to contain or limit the perceived opportunities by strengthening their internal controls. Next, we talk about overview of financial fraud examinations. So as a fraud auditor, right, your first step is to assess risk of material misstatement due to fraud. In this stage, you try to answer questions like what type of fraud, right, and do they actually occur, right? Who might be the perpetrators? These kind of questions, right? And we call these risk factors, or you can call them red flags. Right, basically, we have three groups of red flags. We have incentive and pressures. So you're going to observe, right? Is there excessive pressure on management to meet certain financial target, right? Right? Do they have to maintain their performance in order to remain employed? Right? There could be a high degree of competition or market competition, right? In conjunction with declining profit margins. Right? Those are really red flags. Second group is opportunities. So what are the opportunities for financial fraud, right? It must be some highly complex transactions or major international operations. Especially there's deficiencies in internal controls. These provide great opportunities for committing fraud. And third group is attitudes or rationalizations. So red flags includes ineffective communications or enforcement of ethical standards. Right? Or there's excessive interest by management in maintaining or increasing an entity's earnings trends. And sometimes they create a culture for maintaining an entity's earnings trends, and managers, they rationalize, they saying, talking to themselves, this is good, this is a good thing, but it turned out to be a fraud, right, eventually. And risk factors relating to misappropriations include, right, the susceptibility of assets to misappropriations. For example, there are a large amount of cash on hand in a particular person's hand, right, and easily convertible assets. Those are risk factors. And also lack of controls, effective controls, is also risk factors. Right, there are four basic steps of the fraud examinations. First, identify issues and plan the investigation. Now, usually you will be told there are some anomalies, right, within the company, so you're hired to do the investigation. Right, for example, there are missing documents in our internal audit, or co-workers report that some people are having a luxury, suddenly having luxury life, because those could be anomalies, right? So you should pursue the anomalies to start the investigation. The next step is to gather the evidence. And you're going to tell whether a fraud has occurred or is occurring. Right? There are four types of evidence. We have the documentary evidence, could be hard copy or electronic versions. This include a variety of of an investigation. For example, you can examine all the document, right? Search public records, right? Search database. So all these are included as documentary evidence. And the second is testimonial evidence, right? You interview people, right? Basically, or you can do a polygraph tests. You can test whether they are lying, Yes. And third, we have observational evidence, right? You can actually inspect, you can follow people, or you can do surveillance, right? And watch their daily life, so those kind of things. And number 4 is the physical evidence. Right, you may collect a fingerprint, something like that. Right, with all the evidence, we have the step 3 is to evaluate the evidence. Right, we're going to determine whether a fraud has occurred, and if it has occurred, what's the extent. Right, the next step is to report findings to management, legal counsels. Right, in addition to the fraud examinations, right, forensic accountant can also do business investigations, in which accountant help management minimize business risk. Right, it could be a risk of accepting new vendors, could be a risk of setting up a joint venture with another companies. Right, you got to know other people, to know other companies, to make sure there's no risk, basically. So in these examinations, right, we need to check a business or individual's background. And we use many types of documents. Right, the primary documents we use are typically readily available in many types of investigations. Right, to check a person's background, for example, we can check the person's tax records, right? Check the property ownership, right? Any civil and criminal lawsuits, right? And many other things. And we call these primary documents. We can also have a secondary document or source, for example, a newspaper articles about that company or that person. And typically the strategies we use, we call these work from the outside in. So we collect, secondary sources to know that person. Then we go to the primary sources. Then eventually we hit the target, answer the exact questions. That's called outside-in strategies. And lastly, we introduce the computer technologies in fraud investigations. Right? We don't have any of these, software available, but brief introductions, videos will be provided. Okay, you can watch these videos by yourself and to get a little bit knowledge about those software. Maybe in the future you will use them, but maybe not. Yeah. So first we have data mining software. So this is a tool that models a database for the purpose of determining patterns and relationships among the data. Remember the fraud, right? We can find anomalies. If there's anomalies, it could be a fraud. So this data mining software is going to find out anomalies in millions and millions of transactions data. Right, examples of commercial softwares, we have SaaS enterprise miners. You can click the link to watch a brief introduction of that software. We can also have the waste rule. Waste rule is also used by many companies. For example, it's very useful in insurance fraud detections. You can check that examples as well. right? In addition, there are popular data analytics tools, right? For example, we have the Caseware IDEA. Right? This is a tool that allows users to display, analyze, manipulate a sample of extracted data, and they can watch that introduction videos. We have ACL for Windows, and finally the MindBridge AI auditors. Again, you can watch that for a brief introduction of that tool. Right, the fraud examiners should have the skills to find information from volumes of public records. Okay, there are tons of information in public database. Right, for example, we can check the courthouse records to find any records of lawsuits, right? Bankruptcy filings, tax liens, many other things, right? We can also check company records from their SEC filings, and we can use commercial database to get the data as well. And finally, we can use the internet to get the information. Right, we can use website to find persons' public information, name, right, date of birth, age. For example, the instance checkmate, and there are many websites providing the same service basically. We can use a zoom in for, right, and to check a person's information, or especially a company's information. And now recently, right, investigator also use check the Facebook or Instagrams, all these kind of things, social medias, to investigate possible fraud. Especially for misappropriation fraud, employee fraud, right? If you get money, what are you gonna show off, right? Basically, Instagrams, Facebook, those kind of things. You're gonna post pictures of vacations, luxury stuff, these kind of things. That's a good way to detect fraud. Right, related regulations, two particular regulations. One is the Freedom of Information Act, FOIA. So this act increases the availability of many government records. Right, under these records, right, voter registrations, names, real property records, right, divorce information, these are public available. Second is the Fair Credit Reporting Act. Basically, under this act, individual cannot obtain information about a person's information, such as the their characters, their personal characteristics, right, mode of living, without notifying the person in advance. So we have to let them know. So this is the Fair Credit Reporting Act. And fraud examiners or investigators should learn more about the legality of evidence gathered, to learn more about these rules, regulations.